Hi guys, thanks for tuning in to another episode of Nuggets News. Today I want to talk about the cashless society, and it's been spoken about in a number of countries. It appears to be coming everywhere in some capacity sooner or later, and it's often put under this guise of, we need to do this because of tax evasion, crime, money laundering, and all that sort of thing. And in Australia, they've created a black economy task force. Now, to be honest, I think Australia's economy is undergoing a record expansion. We recently had a trade surplus, so I don't think Australia really has that excuse of, the economy's going out of control, we're missing so much revenue and so on, we have to get this under control. When you look at a country like India, maybe they do have that excuse, but India recently banned high denomination notes, and that really hurt their local economy, particularly in the non-urban areas where those people literally relied on cash to buy food, and there was something like 20 odd recorded deaths once they did ban cash. So whether or not they're directly or indirectly, I'll let you be the judge of that. In Australia, I think the stats are 93% of our physical money is made up of $50 and $100 notes. So again, if they go down that path of banning high denomination notes, it really just bottlenecks just about everything. In Australia, recently there's been talk about putting restrictions on any transactions over $10,000, and there was dates being thrown around initially of July this year and maybe Jan 2020. I think it will now depend on which government's in office. But again, trying to cap the ability for people to pay each other and pay for goods or services with large amounts of cash, and that threshold will start at 10,000, and then it's likely to go down. Now in Europe, they're looking at banning that 500 euro note. Italy and France are cracking down on cash payments as well. So look, this is coming everywhere, and I want to talk about why that is. And really, it's all about control and surveillance, concentrating the power in the hands of a few. And let's talk about who those few people end up being. Well, we know it's the banks, but it's also the payment processors. So think Visa and MasterCard, PayPal. We now have, Apple Pay and Apple Card, Afterpay Australians have become obsessed with. So these people get to make money off every transaction, and it's often the merchant that gets hit. If you've ever run a business, you'll know that it's that 2 to 3% on every transaction that just hurts you. And that's why a lot of real small businesses only want to accept cash, the farmers market and so on. There's so many businesses these days that have razor-thin margins, and so paying 3% on every transaction to someone, it just shows you how much friction is involved with our legacy payment system when I compare it to newer payment systems like Bitcoin and cryptocurrency. But I'm going to talk about that, how that ties into everything at the end. Now, the first problem that comes if we concentrate that power is what happens with downtime. We often see that every month we see the ATMs are out or the payment system's out, and people live day to day. A lot of people do go to the supermarket every evening or every day to buy some food, buy their lunch, and if that's down, everything is such a to-the-minute economy these days that people don't want to not to be able to buy food for 24 hours if there's a downtime, if there's a hack, if there's a power outage or so on. So it just gives people that option to be able to pay in cash, which I believe we need. Now, if we want to take that a step further, it's taking away the choice for you to be able to do that, your freedom and your rights and so on. But think about the China and the social credit system. So not only if the system goes down will you not be able to pay, but what if you're not part of the system? What if you're behind on some bills? Someone doesn't like you somewhere in the system and you go to pay for something and it says declined. Bad luck. And think about how hard it is if you've ever had to deal with Centrelink or the government to get all those papers processed and get back into the system and get on the right side of it. Now, I think that's a big problem, and who gets to have these decisions? Again, it's that centralization of power in the hands of a few, and then we have all the way down, the pecking order for these people that get to rubber stamp and make these decisions, and then bad luck, you're out of the system, you can't pay for anything. Now, this is the part that I think is most important, and it's the control. And negative interest rates are coming. And a lot of people got really upset when I posted about this on my Facebook the other day, that I think negative interest rates are coming to Australia. Now, negative interest rates are currently in 4 countries around the world, and these aren't fringe countries. Japan, Sweden, Denmark, and Switzerland, pretty recognizable household names that currently have negative interest rates. Now, during the last downturn, the last financial crisis, in every previous recession and economic downturn, central banks have two levers to pull. They drop interest rates, and that tends to be about 5% that they drop them to encourage people to spend more money and discourage savings. And lately, they've also been quantitative easing, printing a lot of money, injecting capital into the banks. In Australia, we gave out a little bit of money to the individuals, but a lot of the time it's just giving money to the banks and hoping for that trickle-down effect. Now, here we are 10 years later, and that hasn't really worked, as a lot of people were worried we're going into the next downturn, and here we still are with low interest rates. A lot of countries, Europe and Japan and all that, still buying bonds, still money printing, and oh my gosh, here we are, it hasn't worked, and we're about to hit in the next recession. What do we do? So these countries, basically all the G20 countries, are somewhere between negative 1% and 2% currently with those interest rates. So if they have to drop those 5%, what does that mean? That we all have interest rates between negative 7% and 2%, and all of a sudden you're going to start to get penalized for any savings you have in the bank. We've had it in some countries where you actually got rewarded a negative interest rate to take out a mortgage. So this is just really becoming crazy. I'm not sure if this negative economics works to the same effects once we really meaningfully drop through that zero bound. I think it puts all sorts of pressure and dynamics on different parts of the system. So I'm really fascinated to watch this unfold. The point being that this is encouraging people to put all their money in the bank, a necessity now. It's discouraging anyone to have savings. And as I've spoken about in the past, your parents' generation used to save up to buy a TV or a car, maybe even that new house in your grandparents' generation. Now, absolute thing of the past. Everyone is encouraged to go into more debt, to spend as much as they can to get the economy going. If we think about the circulating money supply, you might have heard me talk about M1, N2 money supply. And what we're really doing is removing all that physical money out of circulation, and then it just becomes fractional reserves. We know the banks only have to keep fractional reserves. So your money, if you deposit that $10,000, it's not actually there. And I believe at that stage they'd start to penalize you for if you are holding cash, or there'd be a 5% fee if cash is still in circulation and we have negative interest rates. You're going to get charged 5% to bring in cash or to get cash. So they're going to still be able to penalize you that 5% on the fiat money supply. Now, legally, we know that once you become a creditor to the bank, the money is no longer yours. And that's where we start to see all these worries and different countries upgrading their bail-in laws. If things get nasty, they want the liquidity to save the banks and save the system. They're not worried about your individual savings, your deposits and so on. That's the greater good of the system that you're going to be bailed into. So this is the first time in history that we have Bitcoin, other cryptocurrencies. Look, I think gold and silver are still really attractive, but the counter arguments are, in the past, they've been confiscated in some countries. They're pretty heavy to lug around. Is everyone going to take them? You can't really, break that gold bar in half if there's something that you pay for is half the price. So look, I think gold and silver are going to play a really important role in store of value and wealth protection. But in terms of the medium of exchange and trying to replace cash, I think cryptocurrency is going to become really important, as well as just getting out of that bank. If you've got some money in your bank and you see all this coming, Bitcoin and these other cryptocurrencies are volatile. We now have a range of stable coins. And if you can say, look, rather than having that $10,000 in a bank, which I know is only going to have a fractional of the reserve sitting behind it, if things start to get dicey, I want to be able to buy $10,000 of gold or a stable coin and get out of the system. So I think that's really going to be an attractive option to people if our banks start to look weak and if all these things start to happen and people want freedom of choice. So I'm really looking forward to reading your comments below. This was only just to get the conversation started. I'm not sure how quickly this is going to come about, how far they're going to take it, but I really do believe the number one point, which they're not talking about, is because the interest rates need to go negative during the next economic downturn, and we can't have negative interest rates if we still have cash and that freedom of choice for people. So looking forward to reading your comments below. Smash that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.